Hi friends, welcome to our channel. Please subscribe if you are watching first time. Today we are discussing about very important standard in IndAS, that is IndAS 20, that is accounting of government grants and disclosures of government assistance as per IndAS 20. So there is two requirements here. You need to account the government grants and you need to disclose accordingly as per the standards. So this is the main requirement of this standard in place. So all these two concepts are important in any standard. Let's jump into the standard. First of all, what is government assistance? There is a difference between grant and assistance, so we'll discuss about that. What is government grant? Assistance includes grant, so then we will discuss about if any government assists to the specific entity or group of entities. That would be the when IndAS 20 applies there. So when IndAS 20 will applicable, if any government gives any specific entity or specific group, then it meets the definition of the government act. You need to check whether it is meeting definition of the government grant. If it meets the definition of the government grant, it will account under IndAS 20 and disclose under IndAS 20. If it is not meet the definition under the government grant, it is not an government grant. If it is there is one definition in the standard. If it is not meet in the definition of the standard, you need to disclose under as an just disclose that assistance as government IndAS 20 under IndAS 20. Means you get the assistance from the government, but that which it meets to the definition 20 or not, I mean the given standard or not is applicable. There are some assistances which is public at large, not any group, not any specific entities. So they public at large, like metro, other government projects, or uh, road layers. All these are public at large, meaning everybody can have the access that facility which is providing by the government. In that case, IndAS 20 is not applicable. Where it is applicable, that would be entity specific existence for the both specific entity or group, any group of entities. Say suppose government will give the assistance to the all oil industries, all petrol industries, all retail industries. So the any group of entities has to be mentioned by the government, or else any specific entity. So I am going to give this benefit to uh, UTL company. That company itself has get the benefit from the government. So then once you get the any benefit from the assistance from the government, you need to check whether it meet the definition or not. I hope you understand this. So let's go into the definition. What is government grant? There is a definition in it. There should be assistance from the government, transfer of resources or cash or benefit to the entity or group of entities for a past or future compliances with certain conditions related to the operating activity, but does not include just assistance to which mandatory value cannot be placed and normal trading activities with you. So this is the definition they mentioned. I know you may not understand completely. Let's break it down. Government grant means there should be some assistance to the entity from the government. So you will have get some benefit from the governments. What kind of benefit? Either transfer of resource, like it is a government entity, and here you sit in the company. There should be some transfer of what? Resource. What kind of resource? Either cash or benefit. You should transfer from government entity to you, either directly or indirectly. Okay, so entity has to receive few assistance from the government, either in cash or in benefit or in resource, when anywhere. Say suppose some resources there, like they have given one kind, some kind benefits. They give one plant and machinery, PPE they give to you to handle it. So this is how it is. Then either for past or future compliances, either there are two types of compliances, right? So once the government has decided, up to when 6 years back, if any government till 6 years from 2021 to 2026, if you generate any revenue is more than 500 crores in the specific industry, you will get benefit of the 550 crores of PPT. I mean 50 crores of one machine will come, one plant and machinery. So in this case, this is the past compliance. So you already provided compliant past years experience. Now there might be future compliance also, like in next 5 years you need to compile this. For that you am providing some assistance like 50 to 60 crores benefit on today, and you need to compile this. This is the structure. So either past or future compliances with certain conditions related to the operating activities. There might be put some conditions or not, that is a discussion point. But you know this, there should be compliances. But the government does not include, this grant does not include these two. One, just assistance to the mandatory value cannot be placed. Just like you went to the government and ask for the suggestions which industry is required and what we need, that some market conditions in it, and they charge nominal, let's say application fees or 500 to 1000 fees. They will give some industry benefit, industry data to you, which is a valid source. In that case, it is just a assistance. It is not and which is not mandatory value involved in this assistance. Like government will provide the data to you, then there is no, that isn't generally available to the public at large. If you went through valid route. I hope you understand this. So if any assistance which is mandatory value is not involved, in that case this is not an government grant. Say example, some free tech or marketing advice by the government, or else some data, or else some telecom industries they need some data from each state, voters and IDs data. So this kind of data to analyze their marketing analysis, they need some data, they went for the government and they give that, government give the data. This is not an, there is no mandatory value there. So this is not a government grant. And also normal trading activity or transactions with you, like if you have an entity, say suppose you have some internet entity. So government guys has to, in their building there are 7 8 floors. In that 8 floors they need some internet facilities, 1 2 3. So all these internet facilities given by the, say suppose ACT fiber. This internet guys is providing the internet facility to them. In this situation, this is the normal course of business. The normal course of business, there is no government association. So if you do your business to the government entities, that is an normal course of business. Say suppose one more example is there. Say suppose one BSNL office is there. For them they need some entertainment package along with the telephone guys. Say suppose they provide internet only. Now they started to provide OTT channels also. So for the OTT channels they might go for the content guys or aggregators to get this content. So that is generally business to the BSNL team. So there is a normal course of business. This is not a government grant. I hope you understand. If you stuck anywhere in this video, please, uh, I mean, please put your comments, put your doubts in the comment section. I will definitely reply for your doubts, or else you can contact me also through comments. And then what is mandatory grant? Your advisor, there should be a mandatory value for the, uh, to apply the definition. So now you understand what is government grant and where it is coming. Then what is mandatory grant? Grant related to the asset. First of all we divide these into whether first one, grant related to asset and income and non, which is cash or non-cash or kind, or else if it is in kind, depreciable asset. If it is cash or kind, if it is depreciable, non-depreciable asset, all these are involved in it. So one by one I will go, and one by one I will go through and explain. First of all, grant related to an asset. If any monetary grant related to asset, if it is a non-mandatory grant, it should be exempt from the definition itself. So we just need to disclose that we get this assistance from the government as per IndAS 20. In the first starting of this video, if it is any assistance you get from the government, if it meets the definition, you need to apply accounting standard and disclosure. If it is not meet the definition, you need to just disclose in the standard. So I hope you understand this. So now we are going to about this mandatory benefit, mandatory grant. In the mandatory grant, grant related to depreciable asset, grant related to non-depreciable. Mandatory grant means, monetary grant means it's like cash or kind. All these has to check once, either whether cash or kind, whether grant is related to depreciable asset or grant is related to non-depreciable asset. If it is related to depreciable asset, there are two alternatives. One, grant treated as deferred revenue, or else grant treated as deducted from the fund. Say suppose you receive the grant for 100 crores. Okay, the value of the this asset, depreciable asset, is 120 crores. So now, out of 120 crores, you received from government 100 crores. The reduction is 20. Only 20 crores you need to pay to the banks or vendors. They will give the PPT. So then you will get one PP. You will get one asset. Say suppose 120 crores value of this asset. Okay. In this, right, 100 is provided by the government. Only 20 crores you incurred. There are two alternatives here. Either you show this 100 crores as an deferred revenue and recognize in the P&L as through the useful life of the depreciable useful life of the asset through its ratio of the depreciation, or else if it is government grant is more than the cost price, then the asset will be disclosed in the, or else you can reduce these 100 crores from these 120, just to disclose only 20 crores as an asset and show depreciation for only 20 crores. There are two alternative one, alternative two. Generally, if you show this industry practice this concept only. I will explain why. Say suppose 100 crores is the government grant and 20 crores you spent. Total 120 crores you incurred. Out of this, what would be the accounting entry first? Say suppose PPE 120 crores to vendor or capital vendor 120 crores. This is the main entry. Out of this, again, this is the entry one, entry two. And in first model, you show as a deferred revenue, right? So out of this, you received government grant. So cash or bank 100 crores to deferred government grant 100 crores. In this, what you are telling directly, so you have a liability of 100 crores that if you compile in future compliances. So this 100 crores you need to bifurcate to P&L account in the period of the useful life of the asset and the ratio of depreciation. Say suppose this you will use for 10 years, 120 crores for 10 years, each 12, each year 12, 12, 12. So in the ratio of 12, 12 divided by 120 into 100. So like out of this 10% I can say. So 10 each 10 crores recognized to P&L account yearly. This is the appropriate method in the IndAS. There is another option also. You can directly disclose as an reduction in the cost. Say suppose PP, plant and equipment 120 crores less government grant 100 crores. So net PPE 20 crores. So the entry would be PPE 120 crores to vendor 120 crores. You have received government grant, right? Cash or bank account 100 crores to PPE. There is a reduction in the value 100 crores. So net PPE would be 20 crores only. This is not approved because if you see the IndAS 113 and IndAS, you should realize the values at realizable values or marketing rates. So in these situations, all these government grant assets would be lesser in as per their market value. So their market value is 120 crores, you are showing as 20. This is inappropriate disclosure as per IndAS 20. But there is an option in IndAS 20, but you can choose this model would be the appropriate method as per the previous industry standards. So now you went to the depreciable asset. This is the treatment. When grant related to non-depreciable asset, one more thing. If your grant is more than cost price, say suppose your grant is grant is 100 crores here, cost price is 120. In another example, the grant is same 100. If the cost price is 90 only, so if the grant is less than, the cost price is less than the grant. In that case, you should show the asset at nominal value. Say suppose PP asset 1 rupee to pay creditor 1 rupee. So this nominal asset, you should show this grant at nominal value or 1 rupees or 10 rupees accordingly. In this option, because here only we are showing net of the amount while disclosing the grant. But in this option, not the situation will come, because we will show another gross basis only. And then government grant requires fulfillment of certain conditions. Okay, that I will explain. What is the grant related to non-depreciable? If it is a non-depreciable, it is, we need to check whether obligation exit or no obligation exit. I means, if it is a non-depreciable asset, you need to check, do we need to fulfill certain conditions or not. If we need to fulfill certain conditions, in that case, in the grant while releasing grant itself, the government will put some conditions, like you need to follow protocol of the government, and you need to fulfill uh, export conditions, or else you need to sales conditions, or else profit condition. There might be put some condition, or else you need to create 3 welfare associations after these revenues. All these conditions will put by the government while giving the grants. In that situation, if there is an obligation exit for next to 6 to 7 years or 10 years, the government will mention the period order. On that base, same, some basis of allocation is exist. Treat that grant as deferred income, and recognize P&L over the period of life based on the cost obligation. Say suppose they mentioned in the agreement, like each year you need to spend 100 crores for next 6 years on roads and schools. This is the government obligation given at the time of providing the grant. In this situation, you have a liability of 100 crores each year for next 6 years. So your grant value is 100 crores. Generally, in this situation, your grant value is 1000 crores. In this situation, what is your government grant? So cash or bank 1000 crores to deferred income 1000 crores. These 1000 crores you should allocate in the ratio of these 100 crores for the next 6 years. There is, it is called cost of obligation. That is how you should recognize government grant if it is related to the non-depreciable asset. And again, if you come to uh, no obligation exit case, say suppose government didn't put any obligations to you, so generally these kind of grants, there is no cost allocation, so directly credited to P&L account. So 100 crores cash to income, government grant income in P&L account. In the credit side P&L account, direct 100 crores will come. So that is how you account if it is a non-mandatory, sorry, it is a non-depreciable asset related grant. If it is a depreciable asset related grant, there should be a systematic allocation and everything is there, that you should check. In both cases, there might be conditions fulfillment is there. Say suppose, even though if it is a depreciable asset also, we need to fulfill the certain conditions. In that case also, this ratio allocation is different. This is the different point here. On this, there should be a cost of allocation based on your future projections, and this is the depreciable asset. This is the basis of allocation will change. Nothing will change apart from these 2 points. Within 20 lakhs from the government, yeah. It is a non-mandatory grant. Non-mandatory grant means they give the grant to you, but there should direct cash involvement is not there. There might be indirect cash involvement. Say suppose I will example. Both asset and government grant will be recognized at fair value. In the earlier case, they have provided 100 crores as a benefit to you, but in this case non-mandatory grant means they directly given property to you, property and equipment. They gave 500 crores of machinery value to you, so they spent money to the vendor, so there is no vendor negotiation to you. They directly spent, because government has a lot of seized items, or in the customs also they might freeze so many items. So in those situations, they directly given that asset to you, nothing else. So in that case, again, two options are there. you either you recognize both at fair value of the grant, or else you will recognize at the nominal value. So this is not an appropriate method as per IndAS to IndAS 20. Only you should follow appropriate method only. This is the opinion from the institute material also, but you can choose which method you have to follow. Even though if you show as a nominal value, which is correct, but is not appropriate while you showing the financial statement. So you go to both asset and government grant will be recognized at fair value. So suppose they have given 500 crores worth of asset to you. So entry would be asset to government grant. So this government grant should be treated as deferred revenue allocated on the systematic basis, because I already told you, right, how it would be. Then if it is a non-mandated, if it isn't free of cost, again two options are there. One is fair value method if you want to show the nominal value. If you want to show that nominal value, grant asset to grant one rupee only. If you want to show the fair value method, 500 asset 500 crores to government grant 500 crores, and this is again deferred income, and you should create this as an future income for next 10 to 5 years based on the conditions they mentioned in the grant conditions. If it is a concessional rate, say suppose asset value is 500 crores, but government asks you to pay only 10 crores. So if it is also non-mandatory consent, so you pay 10 crores to the government, they will pay 100 crores value of the asset to you. So in that case, asset value 100, government get 90, and you pay 10. So this is a normal calculation only, right? So instead of 0, you pay 10 crores here for 100 crores value. Then you pay that balance 90 as a government grant. If you want to show in this method, I mean nominal value method, in this case you just show that 10 rupees only, 10 crores only. So again, this is the appropriate method, and this is not an appropriate method as per IndAS 20. To get a fair value, you need to refer IndAS 13 and do some workings to calculate the fair value. However, some relaxations are given to ignore the fair value to show the nominal value, but IndAS 20 has given some relaxation. You don't need to get the refer the fair value in these situations. If you want to show the nominal value, but that is not an appropriate method. Is the industrial practice. I hope you understand this. If it is a grant related to income, one we clear till now we completed grant related to asset. Now, if it is a grant related to income, like they didn't give any asset, they didn't give any related asset related conditions. They directly given as income. Then treat that as a deferred income and recognize that in P&L on systematic basis of the period necessary to match the relevant expenditure in future. They are intended to the compensate. Say suppose they have given 100 crores to you, and they put a condition that you should follow next 6 years. You need to get 20 to 30 national programs has to conduct by the company. So these national programs cost for next 6 to 5 years is your future expenditure. Based on that expenditure, you should allocate this cost for next 6 years. That you treat as a deferred income. The whole concept is that you should treat this as a deferred income and allocate on a systematical basis. And then forgivable loan. This is the third case. One is related to asset and related to income. We have completed. Now forgivable. It means like you took a loan from the government. From government, you took a loan few years back, and after 5 years, government came and uh, give relaxation on this loan, saying that you don't need to pay loan from today, and uh, we are canceling your loan agreement, so you are free to no need to loan. So in that case, that outstanding loan should be considered as a government grant, because we don't need to pay. As generally bank to loan, again in interest to interest payable on loan, all these liabilities will come in every year in the financial side. In those situations, you don't need to pay that loan to the government guys if they give the if they give the concession on that one. In that case, you should treat like this. Loan account attached to grant. Government grant should be deferred income. That government grant to P&L account income. Say suppose your loan outstanding showing as 30 crores as on 31st March the last year. The next year 1st April they come and ignore this loan completely. I mean they give relaxation, they forgive that loan. So in this case the loan has to debit 30 crores to government grant 30 crores. This government grant is deferred income or else P&L income directly based on the conditions. If you want to maintain any conditions for next 3 to 4 years, you should treat as a deferred income. Otherwise, uh, directly transfer to the P&L account. This is how if you treat this as government grant. And the 4 is concession loan. In the earlier case, they have completely forgive the loan. I mean we don't need to pay. In this case concession loan, say suppose government wants to provide 100 crores loans to you, but they will give interest rate at 4%. The market rate the interest rate is 10%, but they are giving at 4%. This is also in government grant, but there should be some recognition and measurement as per IndAS 109, the fair value accounting and what we call cost margin method has to follow here. Say suppose in this example we have taken instead of this 30 crores, say suppose 40 crores is the loan given by the receipt, but fair value of that loan discount rate is 10%, but it is 4% is the government rate has been given. So this difference is the trigger point for us to treat as a government grant. In this situation, just account, say about bank account 40, loan payable 30, government grants 10 lakhs. Based on the systematic situation, we need to defer the income. I hope you understand this. See, let's be clear. See, your loan, your receipt is 40 lakhs, but you need to pay that 40 lakhs at 4% interest rate. But the actual interest rate would be 10%. If you calculate 10% interest rate, the actual value, the present value is it is coming 30 lakhs. So balance 10 lakhs is government like that you received total 40 lakhs, out of which actual loan repayable is 30 lakhs. That you need to calculate based on the future cash outflows. Say suppose for this 40 lakhs you need to pay 10 lakhs for next 4 years. This is how they didn't mention any interest. 10 lakhs plus 4% interest, year 4% interest on 40 lakhs, year 30 lakhs, year 20 lakhs, year 10 lakhs. So this payment based on this payment schedule, if you calculate the present value at 10%, say example at 10%, if you calculate present value, your value is coming 30 lakhs. In this situation, what you do in general, the actual loan is 30 lakhs only, the balance 10 lakhs is government grant. Say suppose 40 lakhs is you received, but your present value of actual loan at 10% is 30 lakhs. So balance 10 only is the government grant. This government grant is a deferred income or direct P&L income or systematic based allocation. This is the conditions of the grant. Again, this we have to disclose as per the IndAS 20. Again, there is one more clause is there. In these situations we need to recognize if any kind, if it any kind or rewards, we need to recognize directly into the P&L account. One is grant related to compensation of past losses or expenditure in previous years. Say suppose on 1st April 2026 government came and like if you spent any expenditure in your previous years more than 500 crores on research and development, we are going to give 250 crores benefit to you as a government grant. In this situation entire should be treated as an, if it is related to entire that grant is 250 crores grant related to that research expenditure, if you already spent in the previous years, has been recognized in P&L immediately. You don't need to defer that revenue for the purpose of giving immediate financial support, which is no further obligations to it. Say suppose they have given one 200 crores project, 200 crores benefit to you, but they didn't put any conditions on it. In that case, you directly treat as an income. That I already told in the initial case also. If they put any conditions in the first page, I mentioned like that. If they did, if there is no obligation, it will directly treated as a P&L account. That is how that is what I explained there. I hope you understand that also. Construction loan we completed, this we completed. In some cases we need to repay government grants. Say suppose because we didn't fulfill the certain conditions, government some put some conditions, we didn't fulfill that. In that cases we need, when conditions are not satisfied, it will be accounted as change in the accounting estimate, not as a change in accounting policy. So earlier you have accounted depreciation based on the values they mentioned and the government grant. Now we are going to change because of this repay, because government has put a condition as I pay 100 crores here. If you don't fulfill the conditions in the next 5 years, you need to pay 30 crores back to me. So you need to pay this 30 crores, or sometimes they will put 100 crores also to repay. So based on the conditions it will. So if you want to bal- pay back 30 crores to them, you need to account that as an accounting estimate, not as an accounting policy. You know, right? Accounting policy and accounting estimate. If it is a change in accounting estimate only, in that case you do prospective basis only. You don't need to do retrospective calculation. If you any repayment happen in the government grants in futures. So this is how, these are just a small treatment how they repay and how they account. This is very simple. See, in the first case, you if treated as P&L accounting. Say suppose you received the grant, you treat it as an P&L account. You charge it to P&L account. Then you should reverse expenditure to payable to government. That is the payable to bank. It is a government grant in a deferred income basis. In that case, already outstanding deferred income is there, that you need to reverse the balance amount and payable to the government grant, and balance is the expenditure. Say suppose I will come with examples. You received 100 crores grant. After 3 years, you didn't fulfill the conditions, you need to pay 30 crores. In the case one, you have accounted 100 crores as an P&L income. In this case, that 30 crores is the expenditure to you, to payable to government, then payable to bank next. So 30 crores is the liability on this date. But earlier you have treated as a deferred income. On this date, the deferred income is 20 crores is there, which is not amortized to P&L on this date, on the repaying of this 30. Then you first reverse the deferred income 20 crores. The expenditure is 10 lakhs, 10 crores. Balance only government grant 30. So balance 10 only the expenditure in this case, because you deferred the income. If it is a depreciable asset, the asset is already capitalized, and then you should uh, increase the asset value, because earlier you have reduced that 30 crores from this, no? Then you want to pay that 30 crores for the non-fulfillment of conditions, but you can't sell that asset, right? So the asset value has been increased. So asset value account increased, that are 30 crores or PP value account, to government grant payable to the government 30 crores. Again, grant payable 30 crores to bank is the when you pay the payment entry. So this is how the simple calculation as given by the institute. And one appendix note to the IndAS 20. There is one appendix note on promoter contribution. Grant related to promoter contribution, we need to recognize as income immediately, not capital reserve or capital share from the financials as per earlier standards. So earlier we used to account as an capital reserve in previous accounting standards, AS2 and all, but now we need to show in it as a promoter contribution only. I hope you understand this standard, and if you have any questions, please let me know.